I think it's a meaningful step. I think it's quite good news. Of course, compromises have had to be made along the way. I think that was already expected by everyone. So I think it sends a positive signal that Europe is gradually coming together. I don't think it meets the hype, that was there of this kind of Hamiltonian moment after Alexander Hamilton in the U.S. It's well short of that. But nevertheless, I think it sends an important signal that the COVID crisis, that neither the pandemic nor the lockdowns nor the recovery from that is going to be allowed to break the union apart. So I think that is very good news. Now, of course, as I say, it's short of the full Monty of Hamiltonianism. And so it's not, the be-all and the end-all of this whole saga of whether Europe will integrate or not. But I think it is quite positive that in this crisis, the euro will survive.
What's also significant, Arnab, is that these policymakers have been able to pull this deal together ahead of the European Open today. How do you think European equities are going to react? Is this largely already being factored into the valuations for key markets across Europe, or are we going to see upside off the back of this?
I think it'll contribute to upside. I think, the story here is that this would have been quite a negative if it had, if it had fallen apart. I think nobody would have expected it to fall apart. It would have been a wait if it had to go into yet another round of negotiations and the next summit and so on. So I think it is a positive. And I think, the risk-on tone that we have here is sort of global and has to do with Europe, but also has to do with the hope for progress. There's some glimmers of progress on the medical front, on vaccinations and treatments and so forth, which all will come together to support the markets in the long run. I think, having said that, we can make no mistake. There's still a lot of challenges ahead to come back from the whole shock that the world has experienced. Nevertheless, it's an important positive.
Southern Europe will likely be the key big winners out of this. Who will be the biggest losers? Which nations? And does that affect your investment strategy at all?
I think you're right that there's going to be, some relative winners and losers, right? So the tide is going to lift all boats, but the dispersion, the kind of range of results across the market is going to continue to be quite wide as it has been. So I think, the countries that are hit hard by this, or the hardest hit, are the countries in the south of Europe and in the world as a whole, emerging markets. But the more we have a kind of risk-on environment, those sort of high beta exposures should improve, especially if there's significant progress on the treatment and vaccination front, right? Because that would imply that you could have an earlier, more full kind of reopening of economies that are services-oriented, that are dominated by small businesses, that are dominated by tourism, much of which is the case in, many of those factors very important in Southern Europe, particularly in Italy, for example, right, as well as in emerging markets. So the more progress we have on that front, the better it is for the weaker members of the Eurozone and the weaker economies in the world as a whole. Whereas it's clearly not a negative for the stronger, more resilient economies of the north of the Eurozone, say more manufacturing and more technology-heavy, such as, or finance-heavy, such as Germany or the Netherlands or so on. So I think, it is a situation where the rising tide lifts all boats, but the dispersion remains, and you get a bit of a lift for the weaker economies in particular, which is quite important for the world as a whole.